Hi, everyone, and welcome to our next presentation with Oliver Velez of iFund Traders. Today, he will be discussing the best moving averages for trading. Oliver, we look forward to your insights. The floor is yours, sir.
Fantastic. Thank you. Once again, guys, thank you for joining the Money Show. Thank you for joining my presentation. Every time I'm given the opportunity to speak to an audience or I have access to a mic, I do try to spread the gospel of trading in the very best way that I can. And I try to share something that I believe has lifelong value as it relates to markets and trading. And I hope I do that today as well. So today we're going to talk about the best moving averages for trading. Now, before I even get started, I'm going to let you know that I'm not and never really have been, for a while at least, a big indicator based trader. I know that there are a lot of traders out there who rely on a lot of indicators, almost to the point where when they look at a stock through the eyes of a chart, it looks like a bowl of spaghetti. That is not me. I am very minimalist in my approach because I believe that focusing on price action itself is 90+% of the game. And all indicators can do is give you an indication based on the item that you're focused on. So for instance, if we have an indication of what the weather might be, that's not the weather. If we have an indication of what might happen, that's not the happening. And so I believe you can get a little too lost when you remove yourself too far away from the item itself, which is primarily the price action. At the end of the day, it's not indicators that actually make us money in the markets, or loses money for that matter. It's actually the movement of the financial item that we're trading. And so with that caveat said, I will say that I am a big believer in using moving averages to smooth out the data. And so since there's an infinite number of moving averages that you can use, I thought it would be great to at least have you focus on what I consider to be the best moving averages for a variety of styles of market play, because different styles call for different moving averages. Okay, so let's get started. Now, guys, I'm going to skip the introduction, but guys, I've been in this industry for a very long time. I am one of the pioneers of the day trading space in particular, over 30 plus years, almost 30 years, being one of the most recognized trainers and educators in the space. So you're in good hands here. All right, guys, follow me on my YouTube channel, guys. Oliver Velez Trading. Over 200,000 people around the world do so. And I spend a lot of time making sure that I give you something of value every single day. Oliver Velez Trading in English. And of course, I have channels in Spanish and in Portuguese. All right, do me a favor, follow. Let's stay in touch. Okay, moving averages, guys. These are what you're looking at here are the three main top moving averages that I teach my traders to rely on. Now, the 200 period moving average, and they're all simple, by the way. Listen, guys, I've been trading for 38 years in total. Well, 40 years in total, if you count the stupid years. But I will tell you that in all of my time as a professional market participant and all of the time I've used moving averages, I found no indication that the sexier varieties of moving averages give me any additional advantage. I'm talking about exponential, triangular, weighted moving averages. I'm not saying that you can't use them. I'm just saying that you can basically pick your poison, if you will, and it's not going to make that much of a difference and at the end of the day. So I opt for simple. If you want to use exponential, it's okay. You want to use a different type, it's okay. The difference is not going to be great. And I'll explain a little bit more about that as we move forward. But I have a 200 period simple moving average. This is the granddaddy of all moving averages. It is looked at by virtually every single institution out there, no matter what time frame you are trading in, whether you're trading in the smaller time frames or the bigger time frames, whether you're a micro day trader, whether you're a long-term trader looking at monthly charts, it doesn't matter. This moving average should always be in front of you, or at least applied to what you're looking at. Then there's the 20 period moving average, which in my opinion is the king of short-term oriented trading styles. If you're looking to play the markets without getting married to your items, you're going to actually have to get married to the 20 period simple moving average. It is by far the number one moving average that short-term oriented periods react off, in my opinion. And then there's the 8 period moving average. The 8 period moving average is your power trend moving average. This is when you find a play that starts to power trend, which I'll show you today. All right. It's not always applicable. I don't like to stare at the 8 period moving average universally as I do with the other two. The 220 are always on my chart. I will apply the 8 period moving average, excuse me, when it becomes clear that my stock has entered into a power trend. And we'll talk about that. And in my opinion, it's one of the best moving averages for power trend trading. Okay. Then we have two others I want to talk to you about: the 50 period moving average and the 100. Now, the 50 period moving average starts to replace your 20 period moving average if you start to expand your time zone. So remember, I told you that the 20 period simple moving average is the key average for short-term oriented movements. But if you're going to play the markets on a more medium-term level, then you're going to have to adopt yourself to the 50. The 50 starts taking over for the 20 period moving average when you expand your time just a little bit. So this, in my opinion, is the king of medium term trading, playing the markets. And then there's the 100 period simple moving average. Now we're getting into long-term moving average. You want to play the markets more long-term oriented. You want to hold your plays for longer periods of time. You're going to look for moments where the 100 period moving average and your item interact with each other. Okay. Now let's take a look at a few things here, if you don't mind. What I'm going to do is I'm going to take you to a short-term oriented stock here today. This is NEO, Japanese battery company, if you will. A Chinese battery company, if you will. Now, we're looking at today's data. As you can see, it's May 13th. We're looking at a 2-minute time frame. So every bar you see on the chart is 2 minutes of time. I'm going to have to get my epic pen up here so I can write on this chart for you. So the blue line represents the 20 period moving average. The red moving average represents the 200. Now, what you're seeing here is the way I have virtually every single chart I ever look at for the rest of my life. I will never not have these two moving averages on the chart, the 20 and the 200. They're almost like a perfect buddy system or a parent-child system, the 200 being the parent of the stock, the 20 period moving average being more of the child of the stock, but they work perfectly well together. Now, one of the first things I want you to understand is that all moving averages are areas, and they are not glass floors or ceilings that break at the first point of contact. They're more zones, if you will. So to a certain extent, most of our trading platforms that allow us to apply moving averages, they lie to us. Do you know why they lie to us? Because they put the moving average on our chart as skinny lines when this is not the case. So if I were to ever build my own trading platform, it would look something like this. My moving average would look like a zone that I would put a band around. Now, I know some people would say, Oliver, that's like a Bollinger Band, but no, I'm not talking about a Bollinger Band. I'm just talking about a thicker line, if you will. And that's how I would draw the moving average. Maybe the line would go through the middle, but I would give the trader the indication that this is not just something skinny, because your stock is going to interact with the moving average, but not as if it's like some concrete item. It's going to interact with it as if it's a rubber band. It's going to interact with it as if it's a fence that you can lean on, a fence that has leeway, or boxing ropes where the ropes don't break, but the boxer can lean against the rope one way or the other. And so when you consider the moving averages as zones, you can play off of those zones a lot better than viewing them as these skinny lines, as the platforms would have you believe. All right. So as you can see here, what you have with NEO today is we open today, move right into that 200 and back off. The overhead 200 area is resistance. It's very difficult to break through that. All right. We move back to that 200 area and pull back again. Now, if you don't look at the 200 as a zone, you might get fooled into believing that, oh, the stock has broken the 200. Oh, wow, the stock is strong. It's broken the 200. But this is not the case. Breaks of your moving averages must be very, very powerful breaks. They must go very nicely beyond the moving average to be considered a true, authentic break. And NEO did not do that today. All right. And so how most of my traders would look for an opportunity with the 200 above you, if the stock moves to this area of resistance, they're looking for strong weakness off of that area, and they move into the weakness. So here's what my traders are taught to do. We move into the 200. This could keep going, but it could start reacting negatively off the 200 resistance. So we don't guess, we simply wait for strong weakness off of the 200. And this bar gives us the strong weakness off. And before that bar is finished, my traders are taught, boom, you put your money in the weak bar, okay? You put your money inside of the weak bar before the weak bar finishes trading. Each bar is 2 minutes of trading, right? So toward the end of that 2-minute period, if that 2-minute period is still weak, boom, we're putting our money in the weak bar off of the 200. We're putting our money in the weak bar, boom, in the weak bar off of the 200 period moving average. Pick one. Okay. And so if you look at the weak bars, the really solid red bars, it doesn't have to be touching. Remember, the 200 is a zone. It's not a skinny line. And there are your plays. I love that sound, by the way. All right. I know you love it too. We're going to throw our money into the weak bar. Now, let's move to the 20 period moving average. One of the, listen, 85% of all trading losses are the result of not playing with the 20 period moving average. What do I mean by that? The 20 period moving average is utilized by us for direction. If the 20 period moving average is pointing upward, our plays should be looking for the stock to go upward. We want to play with the flow of the 20 period moving average. We want to play in the direction of the 20 period moving average. If the 20 period moving average is declining, we want to bet to the downside. So rising 20, we bet to the upside. Declining 20, we're going to bet to the downside. And once again, all we need is weakness. If the moving average is down, as it is in this case, right? Take a look. The 20 period moving average is down. So what are we looking for? We're looking for weakness off the 20 period moving average. When do you have weakness off the 20 period moving average? Right here. Boom. Get inside of that bar right toward the end before it finishes trading. You understand? Now, this is how you can take these two moving averages and just find trading opportunities during the times your stock is interacting with either of the trading opportunity, with either of the moving averages. You just have to make sure that you're abiding by the 20 period moving average directional rule. If the 20 period moving average is rising up, you got to forget about betting to the downside. If the 20 period moving average is declining, you got to if it's rising up, you got to forget about betting to the downside. If it's declining, you got to forget about betting to the upside. All right. Now, I want to point out this area right here in NEO. See this area here? This is what I call a power trend. This trend is very tight. It's compact. It has very few swings or no swings at all. You see, this is the stock swinging, but this is the stock not swinging. All right. It's not wavy. It's almost like a beeline. It's tight to the downside versus this, that. That's your power trend. This is just your downtrend. This is a power downtrend. Very different. Power downtrend. When we have a power downtrend, we want to apply that 8 period moving average, not the 20. This is where the smaller moving average comes into play, but only after you have realized this stock is power trending now. It's not regular trending, it's power trending. One of the key ways to determine if it's power trending is you get a lot of the opposite color bars, but only one or two. So what do I mean by that? When you're moving down, what's the opposite color? Well, red is the main color, but the opposite color is green. All right. So when you get a lot of single opposite color bars, you're power trending. You see? So let me show you this. Check this out. I love this, guys. After all these years, I still get excited about talking about this, teaching this, what have you. But look, single green bar for nothing. Boom. Single green bar for nothing. Single green bar for nothing. Or here's two and nothing. Here's two or nothing. So a lot of single green and nothing. No more follow through. Sometimes two green and nothing. No more follow through. If you get these only one opposite bar and then continue, or sometimes two opposite color bar and then continue, you're power trending. You see, when it's not power trending, you're going to get 3, 4, 5 bars sometimes, and then boom. But power trends 1, 2, go, 1, 2, go, 1, 2, go. 1 go, 1 go, 1 go, 1 2 go, 1 2 go, right? So that's your power trend. And once you have identified that, you put that 8 period moving average on. So let me see if I can do that for you right here. All right. If I can do that, let me just take this down. Let's see if this works. Yeah, here we go. So what I want to do is I'm going to put up an 8 period moving average here. Let's make that this color. Boom. Now you have, during this period, what's containing the stock is the 8 period moving average. Now, I don't want you to think that this is a break of the 8. It's not. Okay. Remember, moving averages are zones. They are not lines. You really need a very serious violation to have your moving average really, truly broken. This is a mistake made by a lot of traders. They look at these things as if they're not rubber bands or fences or ropes that you can lean against. You can lean on that 8 without breaking that 8, okay? You can lean on this 20-period moving average without breaking that 20-period moving average. You can lean on that 200 without breaking that 200. They're rubber bands. They're not stiff, solid glass ceilings or floors, okay? And so the 8-period moving average is containing this activity. By using the 8, I just simply sit back and just relax. Let this thing go as long as the 8 is telling me relax until I get a really serious, solid break of the 8. Okay? So that's where the 8 comes in. Now, a lot of people say, well, Oliver, why don't I just have all 3 moving averages on the chart? You can. I just don't like that for me personally, because the 8 bothers me when it's not relevant. Like, see, the 8 here is not relevant. And so it looks messy to me. It looks like a freaking bowl of spaghetti, like I was telling you. It looks messy. I don't like it looking messy like that. And there's this psychological tendency, there's this natural tendency for your eyes to go to the closest moving average, even when the closest moving average is not important. So even though the 8's not important, I still focus more on the 8 for some reason. And I don't like that. It shouldn't be focused on. So when it's not relevant, when my stock is not power trending, I take that off. But as soon as I get that one go, 2 go, boom, I put that 8-period moving average on it, because I know this is now power trending. The 8 must take over. The 20 is not as relevant anymore. And those are the 3 key moving averages. Guys, you can make your living off of these 3 moving averages. That 8, and say, Oliver, what do you mean I can make my living? Just remember, play in the direction of the 20 and play weakness off of the moving averages when the 20 is down, or play strength off of the moving averages in the opposite scenario. So what are the plays here today? Look at, if you were just playing this stock, remember, weakness off the 20, boom. Weakness off the 200, weakness off the 200, weakness off the 8. And there's how many plays in the morning before lunch in this one stock? 1, 2, 3, 4. 4 plays. Boom. You're done. Go to lunch. You're done for the rest of the day. All right. I love it. Now, I can show you, let's very quickly look at the, let's look at some long-term things here. Remember I told you that we have not just the 8, the 20, and the 200, but what if you're more medium term? So what I'm looking at now is, let me see what I can show you here. Let's take a look at Tesla. Okay, so this is a weekly chart of Tesla. Every bar represents 1 week of trading. Now notice the 8-period moving average. Well, notice how, guys, for a while, your trend in the stock is acting off of the 8. You see? That's when it's at its most powerful. Okay? Then, if it gets beyond the 8, it starts really reacting off of the next key moving average, which is your 20. Boom. And so how do you do this? You play strength. Remember, it was weakness before. Now we go into the bar that's green, power bar green, off the key moving average. What's the key moving average at the time now? It's the 8 here. Okay. We go into this bar. Boom. We go into the bar. Boom. We go into the bar. Boom. All right. Now, this is not a video on selling, but my traders know that once you get well above your key moving averages, you got to think about paring your position down. But here's the thing. When you start to break through the 20, your next moving average, your next key moving average is the 50 period moving average. This is the 50. And so we're coming into the 50 period moving average area for Tesla. All right. And we want to see how that area handles itself. Might be really interesting down here because we'll be we'll be interacting with the 50 and also coming up right upon this area of technical price support, where this used to be the ceiling, boing, 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 and now that could potentially be the floor. So that's an interesting area. And of course, you can go forward from that, and we could apply the 100. All right, I told you that the long term, you start to get into the long-term moving averages when you go into the 100, 200, and there's that 100 down here. That's when you're really getting into oversold territory here in the 100. A lot of times you don't get that far unless you really go through serious bear market activity. All right. So if we go back to our Bitcoin chart here, this is interesting. Go back to our Bitcoin chart here. Wait, I'm getting a chat here. What are you saying to me? Oh, 5 minutes. All right. Notice how Bitcoin for quite a period of time was reacting off of the 20 here. I don't know if you can see that, but when it starts to get going, it's really more of the 8 period moving average it's acting off of. You see that? You see how beautiful and powerful that thing is off the 8? Now, when you break the 8, it's the 20 period moving average. This recent drop is right at the 20. Remember, that 20 is not a skinny line. That's a zone, if you will. All right. Now that's an interesting area because we bounced off of here. And now that same area also is coming in line with the 20 period moving average. So we'll see. All right, we'll see. But I want you to take these moving averages. Make sure that you always have at least the 20 and the 200 on every time frame. Long term, medium term, short term, doesn't matter. Make sure you understand that the most powerful trends of all are going to react off of your 8, not your 20. Well, Bitcoin here was reacting off of its 8, not its 20. When it's the most powerful, it's the 8. When it's a nice trend, but not the most powerful type, it's the 20. And then when you start to get into the 50 period moving average, that's after your stock is sort of broken down and had a correction. And the 100 is when it's gone through a bear market or so. All right. But if you take these moving averages and you use them the way I've told you, always trading in the direction of the 20 period moving average, looking for those power surges off of the moving average, the key moving average, up or down, you can do some serious financial damage in the markets. Now, guys, if I can, one very quickly. I know some of you might be interested in this. I do want to let you know that I fund all of my traders. I have a fully funded lifetime program where you never have to put money into an account. Guys, here my program, Self-Start's my most popular program for $1,600. So instead of opening up a trading account for $30,000, $40,000, $50,000, I give you $50,000 to trade with. All right. This $1,600, $1,700 covers your training for life every single day, but you also never have to commit to any money whatsoever to a trading account. We split the gains. I take 100% of the losses. If I don't train you properly, the losses are mine. All right. And we split the gains. That's extraordinarily fair. And this way, you're not risking your family's money to try this out professionally. For the next 48 hours, the cost is only for my most popular program, the Self-Start program, is only $1,300. You can lose that in one trade. This is for life, and you'll be funded for the rest of your life, starting with 50,000, and then later 100,000, and then later $250,000, and later $500,000, and so forth and so on. Guys, give the numbers down here a call, or go to, or send an email to info@ifundtraders.com for more information. Once again, I want to thank you for joining me. I hope I've left you with something that you can use in your trading for the rest of your life. Thanks again. Ciao for now.